It sure has been a roller coaster year in real estate. We spent the first quarter on a steep incline with prices rising. In April, we hit a descent and had a few cobra rolls and corkscrews thrown in. Whilst I wouldn't like to say we're at the end of the ride, I do think the big thrills are behind us. Let's scamper through the stats, and as I share these, I hang on to my favorite word of the year: perspective. First, median closed sales price. In November, we saw this drop to $1,316,000, down from $1.35 million where it's been since August. This does not surprise me. Homes that closed in November would have gone under contract in September, early October, and at that time we saw prices jump overnight to over 7%. We've since seen those rates come back down to the low to mid 6% range, which I think will mean we'll see stabilization in months ahead. Second, inventory. Month-end inventory was at 2.7 months supply, with 768 active properties on the market on the Eastside. This compares to just 100 in November 2021. Thirdly, multiple offers have been replaced with price reductions. In November, 54% of homes required a price reduction before selling, and just 10% of homes sold above list price. This all sounds pretty gloomy, right? But let's give some long-term context. Yes, prices are down by 8% compared to this time last year. But it's important to note that prices are still up 24% over the past 2 years, even after the recent price decrease. Similarly, inventory is the highest we've seen in a while, but guess what? It's almost equal to where it was in 2019 and is very similar to the 10-year average. So as I've been saying for a while, the bottom is not dropping out of the housing market. We've simply returned to a place of normality. So what lies ahead? Well, inflation is the enemy of long-term mortgage rates. And the good news is that we're seeing signs of lower inflation. So it's likely we'll see mortgage rates come down. If rates drop below 5 to 5.5% in the next couple of months, then expect the median closed sales price to remain between 1.3 and 1.35 million. We may even get a slight increase as buyers look to take advantage of those new lower rates. However, if it takes 3 to 6 months for those rates to come down, then it's likely we'll see median closed sales price come down as well in the first half of the year. Personally, I've never been a fan of roller coasters. In fact, true story, I came off California screaming in Disneyland, crying. So I, for one, firmly believe where we are now is a much better place for homeowners, buyers, sellers, and agents. With that, I close out the year with my warmest holiday wishes to you all. I hope the season is filled with love and laughter and brings some amazing memories for you all. I will see you in 2023.